Hey guys, welcome back. I'm Greg and this is Wall Street Weatherman. It's great to see you again. And this is my second pulse of stocks for November 2025. And like I said in the first video, I'm going to do this whenever there is are significant moments in the market. It's not going to be at any certain pace or cadence. And it's so interesting because I just did one at the end of last week, and now it's the beginning of a new week, and I wanted to extend upon it and talk about the last video we talked about that there is the question of whether or not the artificial intelligence trade is still alive and well in the market because um, the market breadth has become much more narrow and it's resting on only, at this point, not only, but really narrow, and it's resting on that AI trade, and people are starting to question whether or not the that trade is still a good one. And you can see the last video where we talked about that. We talked about Oracle, we talked about OpenAI, circular financing, and so I'm going to talk about that, and sort of I wanted to point out too something else significant that I see, and that is that 5 years ago, there was a joke in the institutional side of money. So there's institutional and there's retail. Retail, you and me. Institutional are the institutions, the the funds, the retirement funds, the 401ks, hedge funds, the professional community, the registered investment advisors, all that. And 5 years ago, they were joking about the meme stock trade. And then the retail community really started to become more and more of a factor. And then, especially this year, and especially since April, um, when we had that sharp dip in April on the tariff scare, immediately the retail buyers, us, came in and bought that dip rapidly, and the institutions were slow to behave for a number of reasons based on history and maybe their experience working against them. But since then, to me, the retail trader has set the tone for the market, and the tail is wagging the dog a little bit. But at this point in time, I'm wondering if that might have changed. So over those 6 months, anytime there was a little bit of a drop in the S&P 500, a percent and a half, the retail trade came in and bought that dip. So that over those 6 months, we haven't had a meaningful pullback of 3% or more in the market, which is, as we talked about, the S&P 500. That has changed. 6 months, no 3% pullbacks. And then just within the last month or 5 weeks, we've had three of those, three drops of at least 3%. Now, they've been bought, but the market has not continued to go up. It's sort of kicking around. So it's not continuing up. It's plateauing and consolidating and questioning that AI trade like we talked about. So my question is, I'm wondering if that retail trader has sort of ceded the lead, given up the lead of the market right now. And a part of what makes me wonder about that is that the higher speculative trades. So remember in one of the videos we talked about beta. When beta is high, that means a riskier investment that moves more than the markets. For example, the nuclear energy play, the quantum computing play, and Bitcoin and cryptocurrency as well. Now, all of those have fallen. And, um, it's interesting. Bitcoin saw some really large holders of Bitcoin, large holders and long term holders that have held it for at least 10 years, which you think about. goes back before 2015. That's in Bitcoin years, like dog years, that's a long time. And there were a lot of big holders that liquidated their positions, sold their positions. And Bitcoin has dropped from somewhere around the 120,000 to down below. It broke through 100,000 and it's floating around the mid 90s, 94, 95 right now. So with those high speculative trades, the cryptocurrency, specifically Bitcoin, my question to myself is, has the retail trader stepped back and um, and and has not bought the dip? Those 3% pullbacks in the last 5 weeks with more of a flat market, a sideways market than previously this year. I'm really wondering about that. And uh, just on that note, people, a part of the original thesis of Bitcoin was that it was a store of value and a safety play when the stock market was, questionable. It was a place to go, but I have to call out that Bitcoin has for the better part of a year has now been trading in step with the Nasdaq, which is the technology heavy index that basically Bitcoin, instead of being that maybe contrary play like gold has been through history, when people get nervous, they run to gold, they run to healthcare, and people were saying they're going to do the same with Bitcoin. But more recently, that Bitcoin trade has acted more like a risk asset. So as stocks like the Nasdaq, S&P it will trade in step with those. So just an interesting thought. And then so I'm wondering if, anyhow, I'm not forecasting, but I'm noticing this with the retail trader. And with that in mind, what has been working well, some energy stocks have been working well in the last few weeks, but healthcare especially. And like in the last video, we talked about healthcare being another safety trade. When people are nervous about the market, they will go into healthcare because they see it as, a place where people don't have a lot of options, where their spending on it is inelastic for, if you can remember that from your economics courses, inelastic being they don't have a lot of choice. And so in times of uncertainty, the investor will sell out of certain stocks and go into healthcare. And uh, that healthcare trade has been doing very well over the last 3, 4 weeks, with a special shout out, I guess, in my from my view to biotechnology, to biotech. So that is somewhere to just keep an eye out for. And you can look into certain stocks in biotech like Biogen or Amgen, or you can just look at the exchange traded fund, which has both of those in it and others. And for example, the IBB is the ticker, the IBB. That's a biotech ETF, and that'll give you a good feel for how biotech technology is going. But I'm keeping an eye on that to see if, as Wall Street says, the baton is being handed from the uncertainty of the technology and AI trade over to healthcare and maybe, a little more specifically biotech for now, but healthcare in general, because there are other ones that are doing well within healthcare. Okay, so one other thing that I wanted to mention is that we had talked about debt, and we had talked about those largest five of the tech companies, that, not the largest five, but the five that I'm calling out, Apple, Amazon, Google, Meta, Microsoft, that they were investing heavily into AI. Fantastic. a year ago, 6 months ago, but then more recently, they instead of financing with cash, they are now taking on debt. Okay. And like we've talked about previously, debt always makes the market nervous, rightfully so, because that's where a lot of historically, you know, really, tough moments can happen when debt gets out of hand. But I'm not worried about that. I am not worried about that because those five companies have incredible balance sheets. But it doesn't matter what I think. It only matters what the market thinks. And this is where I want to differentiate between the long-term investor and the shorter-term trader, of which I am both. Okay. There are positions which I own, which I will own, riding off into the sunset, all things being equal. Essentially, those don't get touched. They go up and down with the market, and time takes care of that. But on the trading front, this is where uh, a company's fundamentals can differ from its technicals. Okay. The fundamentals of those big five companies are fantastic, amazing. Some of the definitely the biggest balance sheets in the world and some of the most financially robust and resilient companies. Those are the fundamentals. Those are what's really happening. And the amount of debt comparatively to their size and to their cash flows is very small, okay? But perception is what matters when it comes to the stock being traded. Those are the technicals. How is the stock doing? You can look at it and say, this is an amazing company. It's fantastic, wonderful. As a long-term investor, go for it. Wonderful. But as a short-term trader, I have to listen to the price action. Okay. When we see Meta taking on some debt and then the market selling that stock down 20%, that is crazy. That is such a huge number for a company that size, and it hasn't recovered since then. So as a trader, I have to listen to the technicals of what the market is telling me, and the market is telling me exactly what we've been talking about. It's not trading well. The price action is not great. And just to add to that, timing, we've talked about the importance of timing. This morning, Amazon announced what else? That they are selling debt and raising money through a $12 billion debt offering. Now, again, that's a very small number for Amazon, but my question at a precarious time in the market's already questioning that both the debt of artificial intelligence and those largest five companies, but also the return on investment. Is OpenAI really going to be able to perform? And these other companies, are they building too much too quickly? So, given the trend of the questioning and of the tape, yet last week, by the tape, that's the old expression for the ticker tape, otherwise just the trading, the price action of the stocks last week. We started off a brand new week and Amazon announced a $12 billion debt offering. So just something to keep in mind. And I wanted to point out too how how fascinating it is that those technicals, that investor psychology and overall market psychology can change so quickly. 6 months ago, 1 year ago, if you said AI, it was boom, people were buying the stock, okay? Up until even 6 weeks ago. But now that's the sentiment of the market can just swing. And I want to point this out because this is something as a trader, that I pay strict attention to. Okay. These companies were being rewarded for spending hundreds of billions of dollars. The more they spend, the better it is. The more AI, fantastic. Now it's swinging the other way. I'm not going to say swung, but it is definitely swinging the other way. And they're questioning all of these things. And is this going to return money on all of that spend? And so it's fascinating the way that the market can really change in such a hurry. Um, and you know, another part of that I just wrote down was, I told you that I have no problem with those largest five companies, that the Fab Five doing well. They're fine. They're taking on such a small amount of debt, and yet the trading has really, moved that way. What I was going to say was I wrote down a sentence. Okay, we've heard about the term keeping up with the Joneses, right? Keeping up with your next door neighbors, in other words. And I really, yeah, I don't know. Not my thing, but people who see their neighbor buy a new car and they feel like they need to, well, I wrote down keeping up with the Megs being or the Mags. Did I say Megs or Mags? But keeping up with those five companies trying to outspend each other, thinking that whoever spends the most is going to win the fastest and grow the biggest and fastest as well. And that's just something to be interested, something interesting to watch. So last two things and we're done. This week, I wanted to put this out on Monday because on Wednesday, after the close of the market, NVIDIA is going to report earnings. Okay. The AI trade, the market, the AI trade, the Fab Five, NVIDIA. NVIDIA is at the center of this universe. They are the provider of the best, most advanced AI chips in the world. And what they say on Wednesday, first of all, please remember that, like I said in a previous video about trading stocks and being safe with it, my personal discipline is that I do not trade going into earnings. Okay. I don't do it. I've tried it before, experimented with it, learned some fantastic lessons, but I don't do it. You do not know what's going to happen. Sure, you could have a quick jump in your investment, but the opposite is true. And number one, we protect against the loss before we even think about making money. So do not trade into going into um, earnings reports. That said, Wednesday is NVIDIA and they're reporting after the bell. And uh, I will be on the earnings call listening to not only the numbers about revenue, earnings per share, did they beat expectations? I fully expect that they're going to beat in revenue, beat in earnings, and raise their forward guidance. Um, and we'll see if that happens. Maybe, maybe not. Who knows? But they have fiscal discipline. They've got their CFO is really great and all of that. But I'm going to be listening more to when they talk about forward guidance. How far out are they going with their orders, with their remaining performance obligations, their RPOs? How solid is it? How diversified is it? We know that they get 40 to 50% at this point of their revenue from those other four large companies. Well, five, we'll throw Tesla in there as well. But I want to know if they're diversifying because no matter what company and what size, I always like income to come from many different sources. And so are there sovereign AIs, I mean, sovereign, countries that are continuing to buy, specifically in the Middle East? Are there other companies making those investments? All of that kind of stuff. But without getting too into the call itself, it's great. Be on the call, watch price action as the call goes on. I think it happens about 4:20 on Eastern time, US time. Um, but the way that the market reacts to what they say is going to tell me whether or not the market is gaining back a little bit of that lost confidence, or maybe one of the most concerning things to me would be if they have a beat, and raise, beat revenue, beat earnings per share, raise guidance, and the stock following the earnings report in the after hours and then the next day and next couple of days, if the stock, if they beat on all of that and the stock goes down, that to me is going to be especially concerning. So something to keep an eye on. And then the last thing is Thursday, before the bell, before the opening of the market, Walmart is going to report. And we will talk more about this, but the part of the reason why that the market breadth is narrowing and it's really resting heavily on the performance of those AI and technology stocks is because the US consumer is having a tough time, okay? Uh, and it breaks my heart a little bit to think about the, more than a little bit, to think about all the challenges that are going on right now as we speak. And there's a term that's been coined or used, especially this year and in the last 4 months, about a K-shaped economy, being that the K being there's part of the US population going up and doing well, and the other part of the K is going down and really struggling. We know that prices are rising. We know that people talk about inflation, okay? Inflation is the rate of change of the prices, but once a price is gone up and stays at this level, inflation might not continue to tick up, but those prices don't change. And what people pay for their food, what they pay for their rent and all the different expenses and is tough. So that's why I want to know, given that the US consumer accounts for 2/3 of the gross domestic product of this country, I want to listen to Walmart because they absolutely are the finger on that pulse of the consumer, and they have a wide range. There's higher end, all the way middle and lower end economically consumer that shops there. I want to see what their report is as well, because that's going to, in a much broader sense, um, tell me about the economic conditions of the country. So that's it for now. That's the pulse of stocks right now, and that's it for the show for today. So as always, I appreciate you. I thank you for watching Wall Street Weatherman, and I'll see you again soon. Have a good day.